Hi, thanks for joining us. I'm John Phelan, the All Ireland Director of Hban. Maybe to help put it in context, what is Hban and what do we do? So we're a dating agency. We do a marriage with a planned divorce. And what that means is, as a network, we bring companies together on one side and we bring high net worth individuals together on the other, and we put them together in what is the marriage. But it's a planned divorce. And the planned divorce piece essentially means that they are all aligned to end up for an exit. And that's where the investor gets their return. To put the Hban network in context, we began back in 2007. And since then, we've done 650 deals. Over 140 million euros has been invested in those 650 deals from our network, but on top of that, there's been another 330 odd million. So altogether, there's been 480 million has been invested in those 650 deals. Interestingly, there's about 255k has gone in on average per deal. We get a lot of individual investors coming in at 50 and 25k's. And really what we see there is that we've started to syndicate those deals where we would have 10 individuals might put in 25k. The sectors that have been invested in 2021 was heavily ICT, and we saw that through the pandemic as enterprise B2B software took off. So 54% of investments in 2021 was in ICT. We saw 23% in medtech and life sciences, and we'll hear from Lucy and Bernard later on. What we interestingly, the 23% that was invested, that was the number of deals, but it was actually 33% was the amount of money that went in. So there's a lot more money goes into medtech than goes into software technology. So we're all Ireland, Hban is. We have Hban Ulster, and then we have Hban out in the west, south, and the east. We have all Ireland syndicates. We have a number of sector-specific syndicates around medtech specifically is a really strong sector for us, and we have Bloom and Boole would have very strong ICT investments as well. We've got some early stage engagement with international syndicates, so we have a strong syndicate in London and Singapore. We have a pilot in Dubai, we have New York, and we're looking to start in San Francisco this year. In 2021, just to give you the context of what we did last year, 18 million was invested by Hban Angels. On top of that, there was 99 million invested from others. So it's quite a lot of leveraged funds where we're invested. So 117.5 million was invested in 71 deals across the island of Ireland last year. The average that was invested per company by Hban, the network itself, was around 252,000. And the median amount of individual investments per deal was about 25,000. We also saw quite a lot of pre-revenue companies in at 41%, but quite a lot of that was in medtech, which will generally always be pre-revenue just by the nature of what they do. So the observations for what we saw in 2021, we saw a lot of bigger deals. So 120 million altogether was our highest in any year that we've seen to date. But we're also seeing a lot of larger leveraged amounts. So we saw 5.5 times other money went in on top of the Hban money. In the US, it was 6. So we're well aligned with the US there. One of the things we always get asked about is valuation data. And it's a dark art, but it shouldn't be. So what we have started to do is to track pre-money valuations. And we have some valuations from pre-2021. We have some here that I'm happy to share with you that we took from 33 deals in 2021. And the average pre-money valuation was 4.6 million. Now, that was across all rounds. But when you go into first rounds, we had 22 companies, and the average was about 3.3 million pre-money valuation on that. The later rounds were obviously higher pre-money valuations, but the data sets we were using weren't as high. The big question we always get asked is, how do you value a company? Is it a dark art? Is there any processes, or is there any guidance that we can give? So we have a template that we use ourselves. We share this. This is publicly available, and obviously we're on video here, so you can take it yourselves. But essentially, what we've done is we've taken it from idea to proof of concept and launch to early traction, revenue, and scaling. And we've given what we see as the pre-money valuations that we see within our network. And there's a bit more detail on that. And this is available, so you can have that. So one of the things we always get asked is, how does that then compare to international value comparisons or data comparisons? So we did a comparison with the UK, and we pulled up the Seed Legal's guidance that they have. And they're very similar to what we have ourselves. So you have the idea stage, prototype stage, launch, traction, revenue, and scaling. And in terms of pre-money valuations, we're very similar to what they guide in the UK, which is very good. We're well aligned. The observations then we saw from 2021 is that we saw a jump in valuations from 3.9 million to 4.6 million throughout all stages of investment, from first round, second, third, fourth. On first round valuations alone, we saw a jump from 2.2 to 3.3 million. And I do caveat that there are some large investments at the upper end of that, which does skew that average. Globally, we saw valuations rise, driven by that wall of capital that's available from the likes of Tiger Global and also SOS Ventures, which are squeezing down deals and squeezing up the valuations. PitchBook reported in 2021 that the global median VC price stepped up by a multiple of 2. So they are stepping up the pricing, which then increases the pricing that we see within the angel world. As an aside, we saw that Stripe closed a 600 million deal in March 21, and that sent its valuation soaring to 95 billion. So that's an amazing story, and just kudos to the Collisons on that. So hopefully, folks, that gives you some insights to Hban, what we do, what we've achieved over the years, and particularly what we did in 2021. And that helps you on your journey as well. So thank you very much. Okay, folks, thanks for that. Next up, we have Lucy O'Keefe and Bernard Collins, and we're going to get into the real meat of what happens and what their experience and their advice is for helping scale a company. Probably best to ask Lucy and Bernard to introduce themselves. I wouldn't be able to do it justice. So over to Lucy, maybe just give us some background to yourself, Crevalve, and the start of your scaling journey.
Absolutely. Thanks, John. So hello, my name is Lucy O'Keefe. I'm the CEO of Crevalve. So Crevalve is a medical device startup. We're developing a device to repair one of the valves in your heart without the need for surgery. And we started our journey in Trinity College. We've our CMO, a physician who invented the original technology, and we secured a commercialization fund from Enterprise Ireland. So we spent 2 years in Trinity College, kind of 2017, 2018, and then spun out of Trinity College the back end of 2018, 2019, and are very focused now on proving out our technology in clinical trials. So that's what we're focused on now. And we're a team of, I think, something like 25 people now. So starting from kind of 2 in Trinity. And I met Bernard relatively early on in our journey. There's a kind of a short enough list of people you need to get to know if you're trying to raise money in medical devices, and Bernard is pretty close to top of that list. So I met him early enough, I suppose, in 2017, mainly just to kind of get his advice and potentially see if he was interested in investing. And I suppose he liked what we were doing, so got involved as an advisor early on, and so spent time while we were in Trinity working as an advisor. And then I suppose that led on to Bernard joining our board as chairman, and has been a real valuable asset to us along the full journey.
And we'll touch on the detail of that in a few minutes. Thanks, Lucy. And Bernard, your own background and condensed, because I know there's a huge amount in there.
My own background is medical device business all my life, really, starting with Baxter, and served my apprenticeship in Baxter in manufacturing. First kind of real sortie out into the world was when Haemonetics in the USA was being spun out because of antitrust legislation. I managed to get involved there as their head of manufacturing, and we did a management buyout, and we grew that business very aggressively for 4 years, and we took it public. So that was my kind of first foray into the world of the financial exposed side of the business, and probably known in Ireland, more associated with bringing Boston Scientific to Ireland back in the 90s, and that's grown to be successful. I left them in the early 2000s and started on my current kind of career, which is mainly board work and investing in medical device companies.
Excellent, thanks, Bernard. And I suppose if we get into the guts of it now, in terms of the practicalities of how do board advisors, angel investors, mentors help scale an early stage company. And we see a lot of companies that are very good at getting to that early stage of the validation piece. But then the scaling piece is another journey in its own right. And there's a huge amount of different structures, temperaments, personalities, and skill sets required. I suppose, Lucy, just from your experience, having a board and having a chairperson like Bernard guide you on that journey, how in a practical sense has it helped you to set up the infrastructure for scaling, the profile set for scaling, and anything else that you might sort of share with the audience?
No, absolutely. I mean, it's been hugely helpful. Crevalve was my first first venture into the startup world. So first time kind of trying to build a board and understanding what that means. So truthfully, I probably went into it relatively naive, and have been very fortunate to kind of start with a gold standard board, to be honest. So kind of get it right in the first go. I mean, in terms of, as you say, the kind of practical implications, it's kind of multifaceted, I suppose. There's kind of the external piece, and then there's the internal piece. So from a kind of external piece, obviously having the caliber of people like Bernard on our board that are very, very well respected in terms of their judgment of kind of assessing companies, carries a lot of weight when you're looking to raise capital with individuals that maybe don't know us or don't know our market or our technology in detail. And so that it's endorsed by someone like Bernard obviously carries a lot of weight with people. And certainly when we were trying to raise capital, I think that would have been impactful in terms of, particularly when you're talking about angel investors, where they don't have the bandwidth to do, the level of detailed diligence maybe that a VC would do. The weight of someone who's recognized and valued as good assessor of this, like Bernard, carries weight in terms of then other people getting involved. So that's kind of the external facing piece. From an internal perspective, then it's obviously hugely useful in terms of having someone who's lived this journey with other companies and understands what are the important things and what you need to worry about. So certainly from a strategic perspective, we would value very much the input from our board, and in terms of, making sure we're worrying about the important things. We're clear from the start that we want, to build a world-class company. And so that you need to kind of start with that vision and kind of invest in that and build the right foundations, starting with the board and the team. So to making sure that, the moves we make are kind of aligned to that, and that we're very much looking at that kind of from a global perspective. So certainly kind of in terms of what the team need to worry about, we would value very much the input from the board on that side of things. And also where we've had challenges along the way, Bernard and our board have been very helpful in terms of getting stuck in to help us out on that. And that's I suppose always the test of any startup, in terms of, it's all good when things are easy, but that you find a way to work through the more challenging times, I think is the real test. And we've certainly demonstrated that, and our board have been hugely helpful in that. And Bernard, certainly having Bernard in your corner is very good where there is those more challenging scenarios.
I suppose one of the things we always say about bringing angels in is that they tend to bring a lot more smart money with them. So it's not just the cash, it's the smarts that come with it. And that's possibly the technical validation piece, but probably more importantly for a lot of cases is the commercial validation, or the ability to connect into their network. And has those practical things helped in terms of here's a commercial network that's been opened up, not just from Bernard, but from the rest of your privates that were there as well. And just wondering if that commercial network has been opened up, and technically has there been input from the privates as well?
Yeah, I mean, you know, you ultimately find, I think, any industry is, you know, is relatively small globally. So actually, you know, most people tend to be kind of, you know, if you kind of start with it with a reasonable kind of network and the right connections, you can kind of tap into all relevant people globally, you know, within kind of one degree of freedom. And certainly that's what we found, I suppose, you know, with our board and with Bernard, that you know, they're pretty well connected globally, and so there'd be very few people, I think, that we would have looked to connect with for input that we couldn't do that with kind of one degree of separation from our existing network. So that's been very valuable, and it kind of means you can really get the input you need and the connections you need, and you know, it all kind of builds on that.
You make it sound all so easy, Lucy. I'm sure there's many people going, well, why can't I have that, please? Bernard, over to you in terms of building a board and scaling a company, and you've been involved with huge amounts of deals, certainly through Hban, the MedTech syndicate, and outside of that as well. Previously, before we even started Hban, what advice would you give to somebody who's thinking about setting up a board or has a board but need to take it to the next level and scale it globally? Any insights there that you can share?
Yeah, I think that my experience across the industry has been split between two kinds of companies. There are companies that have boards who are trading successfully and who, you know, and there's a lot of them around. I mean, people like Aerogen, people like Connemara. But the challenges for the board of that company versus the board of a startup, which is bringing in venture money, are actually significantly different. So I'll kind of keep they have a couple of things in common though. And I suppose the thing that they have in common is you've got to start out with the view which says that you're going to build a great company. You're going to set standards and you're going to do things right. So you've got to have that standard in front of you at all times. This isn't about penny pinching. This isn't about cutting corners. This is about making good decisions based on a vision of where you want to get to and keeping the highest standards. That's common to both sets of companies. If you look at the companies that we're talking about, the Crevalve, I think that the most important thing, and Lucy, I suppose, either intuitively or otherwise did this, is that you've got to build your board, in my view, ahead of the money coming in. And that's because I think otherwise you're going to get swamped by shareholder demands in terms of how the company is run. So if you build your board before the money comes in, as Lucy did with myself, and we added Chip Hance, who's a very experienced guy in the USA, to the board. He's ex-president of Abbott Vascular Labs and currently in private equity. And we added him on very early on. We were lucky then, the MedTech and the Iris money came in, but it came in terms of a plan that the company had set up. The VC money came in, some of it at that point in time, and we really got lucky with the board insofar as that Atlantic Bridge appointed Helen Ryan, who's also a veteran of the industry, to the board. So we ended up with what I would call a strong board, which was there ahead of the money. And so the board, it's important that the board supports the CEO and to achieve her or his objective in terms of going forward. So that was the story with Crevalve. Crevalve had their vision. They knew what they wanted to do. They were happy to go for high standards. We built the board prior to the money coming in. And so and then as we went into the A series, which is where we are now, we again added to the board an additional US veteran who had sold companies in the medtech space in the USA. And she came on board. And so they came in ahead of the money. And so the investors kind of really like the look of the board. But it's the second thing I think that we did right in building the company, and it's back to Lucy. Lucy hired apart from directing where she wanted to take the company, she brought on board a very strong both technical and clinical advisory board group. So whenever while she might make use of the investor group from time to time, because you will find pockets of nuggets of information and experience in that group, the real experience comes from within the industry. And she's been extremely good at building technical and clinical support groups who she can go to for advice, and that gets bounced about at the board then for discussion. But you got to do it at both levels.
And I suppose two quick questions to both of you. What's the ideal size of board? Do you start at the end and say this is the exit, or do you say it doesn't really matter, we're just going to build a great company and the value will find its own exit? Any thoughts on that? I'll go to Bernard maybe on that one.
Yeah, I don't think it's an either or. I think that you've got to start with the view that you're going to build, and the standard I use is that we're going to run ourselves as if we had the ability to become a public company. I'm not saying that we start off by saying we have all the reporting that a public company. You've got to trim your reporting, but your standards and your values have got to be that if we were a public company, would we stand to that kind of scrutiny? So I think those are the standards that you got to raise. And so, I've stayed involved with one or two companies throughout my career who have the highest standards of governance in terms of big companies. And I've stayed on the board of one of those because it's helpful. I think in terms of how do you build your board as you require it and as you go along. But I like to keep a balance of independence on the board as opposed to having a board which is shareholder dominated. I think shareholders have to be on the board and they have to be represented, but I think you can represent shareholder interests through the constitution, through the investor majority kinds of clauses, and through those kinds of controls. You're better off having people on the board who are experienced business people. So I tend to try and get more, and I find those boards are more successful than boards which are shareholder dominated, because you often have conflicts between building a great company and the short-term views of some shareholders.
Yeah, I think we've seen that before, Bernard. Lucy, yourself?
Yeah, I mean,
that?
Obviously, in terms of, I think you asked the question around numbers. I mean, I think, you need to be careful not to kind of, I would say, add too many people up front, because you're on a journey where, typically every time you maybe take in significant cash, you might add to the board. So I think you need to kind of make sure that you set it up to kind of be able to work as you go along the journey and not start too big. But I mean, I'd fully agree with Bernard that, ultimately the aim of a board is to add value to the strategic direction of the company. And if that's the case, it's good both for the company, it's good for shareholders. And so you need to kind of try and make sure your board have that experience to be able to do that.
So the ideal size of the board? 4, 5, 6, 7? Which?
Definitely not more than 7. I can live with 5. But I think that one of the things that we've done is that in Cree, which is a little bit different, although we've seen it in one other company, is that the board is the board, but that there are smaller investors who are investors for, say, kind of less than 10% of the total equity in the company. We create information sessions for them, which happen the day after the board or within 2 or 3 days of the board. So you keep your shareholders with you in that regard. So there are different mechanisms for dealing with it, but the board itself, you try and keep to 5, maximum 7.
Excellent. I suppose, Bernard, just coming back to all your experience and all the other companies you've been engaged with, what advice would you give to somebody who is at probably a bit of an earlier stage than where Lucy is at now, both from a commercial perspective and building a board or building an infrastructure to scale so that it's ready to scale? Is there any advice you could give to sort of earlier stage entrepreneurs?
I mean, I think that one or two of the things I said, I mean, you've got to start with the goal of building a great company, and you got to figure that out, what that's going to look like. And so you got to figure out the journey. I think getting as far as possible on that journey through bootstrapping is a really good idea. There's a lot of money out there that's available through EI and Europe, and indeed friends and family are what I'd call investor-friendly kind of people who know and understand the business. I think that's a great way to get on the journey. The further along the journey you get, before you kind of open yourself to the VC world, the better, for two reasons. The VC world aren't interested in startups. They really want to get in at Series A. And secondly, once the VC world starts to come in, you are going to start losing equity. And the earlier they come in, the more equity you lose. So I'm saying advise people to work as hard as possible to get as far as possible before, and bootstrap as much as you can before you bring in the VC world into your company, because it changes dramatically, sometimes for the better, sometimes not for the better, but that's another day's work. We could debate that for a long time.
I think we've had plenty of discussions around that, Bernard, and there's lots of good stories, both good and bad on that one. Listen, folks, I'm conscious of time. Just in terms of any last observations for the audience, given who we have on this call? The audience is typically going to be reasonably early stage startups versus those who are just starting the scaling journey. So they've just gone, or they're either starting the journey that you've just gone through, Lucy, or just starting on the scaling side. Any last observations that we haven't asked questions on here that you just sort of say, this is a really heartfelt one in terms of one thing I'd be doing if I had to start again? That's to Lucy this time.
Sure. I think for me, it's all about people. You know what I mean? I think that's both the team, the board, as we've discussed, but also the management team and the whole team. So I think for people starting the journey, spend all your time getting the best people you can, and everything else will follow. Get that right, and you'll have the right people to kind of work through those issues or those humps as you see along the way. And if you don't get that right, then it's a far more challenging activity. So I think, my advice would be spend all your time getting the right people, both at a board, but management team right throughout the company, and then you'll be able to achieve anything.
I keep saying to everybody, just hire people much better than you. It makes life a whole lot easier. And I find it's very easy for me to do that. I keep saying that to people. Bernard, any last observations there from you?
Yeah, I think all of that is absolutely right. And I'll kind of comment on it again, but I think you've got the entrepreneurs and investors have to have a checklist. And I have my own, and it's pretty straightforward. Is the market opportunity big enough? Is it at least $1 billion is kind of where I say. Secondly, has this company got something unique? Have we something different that's going to be that nobody else has, or that very few have? Have we got something that we can point to? I think thirdly, you've got to ask the question, does this solve a problem for the docs? In our business, if you're solving a doctor's problem, then the likelihood is you're on the right track. If you're trying to say we'll take cost out of the healthcare system by reducing a procedure from 30 minutes to 20 minutes, forget it. That's not going to fly. Have you got your IP in place? And most important from an investor standpoint have we the right CEO? And if the rest of it follows. If you've got the right CEO, then I think that a CEO has got to have breadth, got to be strategic, got to be process oriented. And so, that to me is the key success factor. They can have all of the above four, and if the CEO is wrong, you won't invest. The CEO has got to be right, and the above four that I mentioned have to be 75 to 80% right.
Brilliant. Listen, folks, I think on that note, I'm going to say thanks, Bernard Collins, and thanks, Lucy O'Keefe. hopefully everybody gets some insights out of that. As always, it's a great learning experience for me to hear all of these stories, even though we see it every day. So I think hopefully everybody got something out of that. And just want to thank Lucy and thank Bernard once again. And thanks everybody for your time. Thank you.
Thanks, John.
Thanks, John.